Well, good day to everybody. Mynor Ramos coming to you along with Michael Domico. And you've probably have seen some of our videos, some of the content that we're putting out. A lot of you are reaching out about other things that we're able to do. And so today we're going to cover something that is so interesting, and it's something that's badly needed. But for anyone who hasn't heard us speak before, my name is Mynor. I've been a mortgage banker for over 20 years, and I'm fanatical about financial structures. Got together with Mike Domico, but Mike Domico's got a really interesting, long, really resume of history, experience, and being in the insurance industry for over 50 years. So, Mike, say hi to everybody and let them know a little bit about yourself.
First of all, hi to everybody. And of course, hi to you, Mynor. Thank you for this opportunity. Um, yeah, I have been fortunate enough to be around this industry for over 50 years and started out as a debit agent in West Virginia. And I'm sure 95% of the people do not know what a debit agent is, but simply we actually went around house to house and collected premium from our insureds and then serviced them and met new people, so on and so forth. So that's how I started in the industry in 1971. It's been an extremely fortunate and lucrative time in the industry. And what I'm at now, or the point I'm in my career right now, is I want to give back. I want to not only talk to prospects and keep my clientele growing. I want to talk to agents, and I want to explain to them the opportunity they really have in front of them and encourage them to pursue it at a very high level of integrity.
And we want to specify we're talking about independent agents or would-be independent agents, right? Because
Well, all agents, because most captive agents, when they start off in the business, don't know any different. And for whatever reason, they start with a company. And of course, there's a lot of great companies. I was a captive agent when I started. I started with Prudential in 1971. So no, it's for all agents, whether you decide to stay captive or go on your own. The principles we're talking about are the same, and the ethics and the morals behind it are definitely the same.
right. Well, then let's get right to it, guys. I'm going to go ahead and start to show you exactly what we have for you today. This is Advanced Insurance Services, and we want to emphasize advanced. And the reason why you may or may not have heard about what we're going to discuss with you is because it is an advanced product. Now, we want you to consider when when your client, when you're delivering or you're having meetings with your clients, helping them to discover the true value of their life insurance contract. Now, we're talking about life settlements, life insurance settlements. Now, if you're taking notes, I want to talk to you a little bit about what we do know from surveys that have come back. Over 90% of those seniors that were surveyed say they would have considered a life settlement if they even knew that it was an option. Now, how many of you, maybe, show hands or maybe put a 1 in the chat? Honestly, how many of you have heard of a life settlement and knows how it works? I'll wait. Okay. All right. Well, then, as the responses come through here, I'll ask you another question. Some staggering facts are that over 80% of the insurance policies never actually result in a death claim because there's a lot of reasons. They expire, they lapse, and then really it goes back to that survey. If there's something else they could have done to take further advantage of that. So the keys to this is if the life insurance policy isn't doing what it was intended to do, there's a nice little raise of your hand. If there have been significant health changes in the individuals, again, we're talking about seniors, so I mean it's likely that you can see a lot more of that, right? Or third, I love the fact that Zoom just responds to everything that I do. I got my hand up. So the third one is this, is that maybe their financial situation has changed. Now, Mike, over dinner, at lunch, whenever we have a chance to talk this, we talk about the market. Now, you know about some really, really staggering statistics that are out there. Can you share with everyone?
Yeah, Minor, thank you. I was just talking to one of my chief brokers who I've been working with for over 15 years. And he says, I'm really happy you're doing this seminar program. He says, but I want to mention a couple things that I'd like you to mention. Um, and it was definitely pertinent what he said, because most people, as you've already pointed out, Minor, has never heard of life settlements. And the reason for that is, first of all, out of all the policies, and there's thousands of them every year that are either lapsed or people stop paying the premium or they try to cash them in, or whatever reason they get rid of their insurance, out of hundreds of thousands of policies, less than 6% ever get life settlements.
Hmm.
So you're talking about 94% of the people don't even know to ask about life settlements. Second of all, another reason they're so obscure is that when a policy is sold as a life settlement and therefore becomes an investment vehicle, they're sucked up by the institutions, banks, other insurance companies, investment firms of all type, because they're so solid and they're so lucrative that they never get to the general public that they even know they exist.
Hmm.
There's a commercial from a very well-known company that's on right now in our area, and I think it's nationwide. And they talk about buying your life insurance policy and that you're sitting on a gold mine. Well, that's absolutely accurate. And of course, in the commercial, for whatever reason, they never mentioned that it's a life settlement. So
Hmm.
people that have not made the connection. But
Hmm.
yes, if you have either a guaranteed UL, GUL as it's called, a UL, universal life policy, an IUL, which is an indexed universal life policy, or, and this is the one that people know the least about, a term policy that's convertible to an IUL or a UL, and you're over 65, and the face amount of the insurance is over 100,000, you have a candidate for a life settlement. Uh, Also, life settlement is what we refer to as reverse underwriting. In
Hmm.
other words, when an agent goes out and writes a life policy, they're looking for the healthiest person they could find, so that when they underwrite it, the company says, yep, that's a standard or preferred or whatever it is. Life settlements are exactly the opposite. So if you have a client that has any type of illness or any type of chronic condition, they actually can get more for their money, for their life policy, than a healthy individual, simply because the whole idea of the investment is the arbitrage between what the investment company buys the policy for from the client and then what the investor gets out of it at the passing of the client, because they become the beneficiary. And the arbitrage between those two numbers is what the whole industry is built on.
Yeah, talking about the industry, Mike, you covered a lot, and we're gonna dissect that as we go through. But I'm curious about the audience. If the audience, has never heard of this, if maybe we can put in there, like what do you think the market size is? I mean, do you think that there's any kind of potential for this kind of solution to the client? So go ahead and take just a couple of seconds there, and maybe throw a number. How many policies in a year are impacted with this, or maybe even the dollar amount. Do that for just 2 seconds here. Let's go ahead and take a look at that and see what the impact is to the marketplace. Look, over 500,000 policies are lapsed or surrendered to insurance companies each year. So if
Yeah.
you're thinking, is there a market for this? Well, and to the tune of $143 billion, right? That things that are lapsed. Now, of course, we're looking at individuals that are 65 years or older. So, I'm sure that in the marketplace, the dollar amount of lapsed policies is a lot higher, but we're particularly talking about life settlements. What's been your experience, Mike, when you hear about this and just know what the potential of the marketplace to be able to give the policy holders more benefit to their policies.
Yeah, when I do talk to somebody who is a candidate for a life settlement, and again, we don't care why they're getting rid of their policy. There's many different reasons. Uh, but an executive, for example, at a corporation who may have had an insurance policy that the corporation bought years ago, just doesn't have a need for that much insurance. And they'll say to me, "Well, if I cash it in, it's worth $20,000. It's probably more than that, but whatever the figure is." I point out to the person that a life settlement could be as high as 7 or 8 times that much. So if it's 7 or 8 times, that means instead of $20,000, they could get 140 to $160,000. That's real money. That's significant money, and they can use that to just blow on a trip around the world, or to just augment their retirement plan, or in many cases, if there are health problems, take care of some of those health needs rather than going to debt, or rather than liquidating other assets that are harder to replace.
Yeah.
So when we meet people and we talk to them about it, they are greatly appreciative, because you can literally change a person's financial future in one conversation.
And I'll add to the fact that, there's a saying that there's nothing new under the earth. It's just that we didn't know about it. It's all right. So why
Yeah.
explore a life settlement option? And we really, really need to go back to the court's decisions, because I think a lot of the individuals that have never looked into this are thinking maybe, they're newer, agents are like, well, I took my exam and they say that it has to have a connection. It has to be somehow tied to the family. There has to be a reason for it. And it's true when you set it up, but a policy is a private property. Now, I didn't say that. I didn't say that. Let me say the quote, and then Mike Domico is going to tell us who it is. So far as reasonably safety permit it will permit, it is a desirable to give life policy the ordinary characteristics of a property. Who said that, Mike?
No, none other than the Honorable Justice Oliver Wendell Holmes Jr.
And that
He
was in
wrote
2020, right? Is that when he said that?
no, a little bit before that, 1911. There was it was just real quickly. It was very interesting case. A person had a life insurance policy, found out he needed an operation, couldn't afford it, and he told the doctor that he would give him his life insurance policy. So if anything happened to him, the doctor would be paid. The doctor accepted it, bought the policy for $100, did the beneficiary changes, so on and so forth. And then the family came back later and tried to fight it, saying that it wasn't allowed to sell it, exactly for what you pointed out, what's called insurable interest.
Mm-hmm.
Well, Oliver Wendell Holmes wrote the decision, and he said that this is a personal asset. Now, the average agent's going to say, "Whoa, wait a minute. I just took my exam." And that was
Mm-hmm.
one of the questions. You have to have an
Sure,
insurable
for
interest,
interest.
either a relationship or a financial interest. Well, as Mynor has stated, that is exactly true, except until the policy is issued. Once the policy issued, it becomes personal property, and the insured and or the beneficiary,
Whoa,
you know,
whoa, 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 whoa. Hold on a second. I think you just dropped a big one here. So hold on a second. A lot of people are like going through this in their mind, like, oh, hold on. So after the policy is issued,
right,
this can happen behind the scenes, and like now because if it is their property, then they have a little bit more control because it's an insurance contract. They're able to, to have control. This is why it's possible. Now, I'm answering the question to a lot of people are like, is this true? How can this work? Right? I mean, and rightfully so, because, and I think, when I first heard about this concept, I was like, I liked it. I was intrigued by it, but I didn't know how it worked. So maybe we're now answering the question for those who either may be skeptical or just this is way too much for them to absorb. But there's more when it comes to legislation. See, in 1966, right, the HIPAA laws, with the passage of the Health Insurance Portability and Accountability Act, it allowed the owner and or the beneficiary to transfer the ownership and or beneficial interest in that policy to a third party. Again, this didn't happen in 2020, 2021. Guys, it's been around for a long time. So what are your thoughts on this, Mike? You know, because I mean, this is important.
Yeah, absolutely. And it's interesting that you mentioned the 1966 HIPAA law, because this whole thing was brought up again because insurance companies were actually fighting this. And when HIPAA was being discussed, that was one of the things they wanted to address, the ownership. And what HIPAA law did, it went back to the original ruling. And besides everything else that HIPAA did as far as portability and accountability, it reiterated that the majority decision of 1911 was accurate, was legal, and they underwrote it to stand as was, which is life insurance is a personal asset. And once an insurable interest is done on the original policy, policy is then a personal asset, and the insured can change it to whoever they want.
Excellent, excellent. And to add to that, now, excuse me, my very first license was in the state of Florida. My instructor told me that if I got a license, a life insurance license from Florida, I was in one of the most difficult states because they protect the elderly against financial crimes and against financial any kind of abuses. So when it comes to that, this arena is highly regulated, and think about the mandatory consumer disclosures. We're talking about the HIPAA thing, right? So like obviously people, if they're made there has to be more communication and understanding on what they're doing. So look, a competency certification. I mean, you can't take, advantage of Grandma Jean and have her sign something she doesn't understand. It has to be a competency certification. And then you have to have a beneficiary acknowledgement, right? Because if this is a conversation between the family, so we want to have those conversations with the family. Then you have the insurance department has an approval form that needs to be done, and probably the most important part of this, the licensing of brokers and the providers is where the knowledge and the experience comes in. So even though, some people are like, well, this is a new concept, I'm going to go and try to figure it out this on my own. And that's okay. People are free to do whatever they want to do. But the experience, Mike, the experience and the number of years that our brokers and providers in this industry has been, just talk about that for a little bit and put people's mind at ease, if you would.
I have a case I'm working on right now. It's a $600,000 face amount. And we've been working on it for a couple weeks. And the client called me up last week. He says, Mike, I got this letter from the life settlement broker, who is the guy I work with. And he says, I don't understand it. I says, well, Jim, what does the letter say? And it turned out that what it was all about is this gentleman who had the policy had done estate planning. So his wife was actually the owner of the policy, which is an estate planning tool that we've used for years. So what the letter was about, not only did they question his competency as the insured, they wanted proof of her competency as the owner and beneficiary of the policy. And that's what the letter was. So they had to do a statement that, do they understand what they're doing? Do they understand, the severity of making this choice? Severity in the sense that once it's made, it can't be reversed. This is a one-way, decision. So I went over it with the client, and I said, Jim, do you have any questions or any concerns? He says, no. He says, I just needed to see exactly what this was about. He says, we'll sign it and send it in this afternoon, which is what they did. So, and that's my job, or whoever the agent is at the time, between the broker and the client, my knowledge and my ability to say, yeah, okay, here's what we're doing. This is why we're doing it. It's okay to move forward. And with a few years of experience, that's important, because people are always a little wary of anything that looks sort of legally binding, and rightfully so. And it's my job to make sure that I know what is going on. And I was surprised that he got the letter before I got the notification, but that happens too. So
And
yeah. The
It's
knowledge
interesting.
and the experience become extremely important.
Right. And you mentioned brokers, right? So there's obviously some going back and forth between somebody who might, make an offer and the other one who might, present the information for consideration. So who who can qualify for this, right? We talked about this somewhat, you mentioned it, but we're really looking for someone who is 65 or older and has had some changes in their health, their personal or financial, like their situation since the policy was issued. There's a reason for it. That's kind
Right.
of what triggers, what may be offered. Now, if the person's under 65 and living with a serious illness, they may also be able to get reviewed. But listen, I want to point out, look at this guy in the screen over here, doing some yoga. Is that what he's doing? Is he yoga in front of a computer? I mean,
Either that or just likes holding his toes, one or the other.
okay.
Yeah.
I hope he's holding his
But
breath. All right.
but that brings a very good point up. I have a 75-year-old man right now, $350,000 policy, and it's been turned down 3 times already. And I called him up and I said, Joe, I says, I got good news and I got bad news. He says, well, give me the bad news. I said, well, the bad news is we don't have an offer on your policy yet. He said, okay, give me the good news. I said, they said you're going to live too darn long. Again, you have to understand what we're doing. We're taking the life insurance policy and turning it into an investment vehicle. You know, if the person who buys the investment vehicle could vote, they would vote on not having a long life expectancy for the person who's named as the insured.
Mm-hmm.
And of course, that's what happened with Joe. Now, ironically, we are now recasting Joe's policy with other brokers because we have 9 to 12 different brokers
Mm-hmm.
that we work through. I have one broker who then farms it out to different life settlement companies. So Joe's case isn't closed yet. It's just so far we haven't had an offer. But even the last one, Jim's case for 600,000, was turned down 8 out of 9 brokers
Yeah.
because everybody has different, you know, investing groups that they're trying to meet the criteria. And so, in Jim's case for the 600,000, when we got the offer, we were actually surprised because we thought we weren't going to get one on him either. In his case, he had a chronic illness that he felt was more serious than the insurance companies felt, and that's why the disparity.
Gotcha. So then maybe there are some agents right now that are just wondering, well, like, what type of policy is the best one to look for? Well, I'm so glad you asked.
Funny you should mention that.
Here's a list of them, right? Really the ones that get the best offers are universal lives, convertible term, variable joint survivorship, whole life. And within these, so we're gonna break it down even further in just a little bit. But these are
Mynor, I am going to point out though one thing: variable life has fallen out of favor with the
mm,
life settlement industry because of the volatility of the product itself, since it's specifically based on stock. The life settlement industry has sort of backed off from variable. So again, like I tell every agent, always call. We'll be glad to review it, but keep the expectation at a fair level with the client. And variable is a very low expectation that they're going to make an offer.
a low expect. So let's take a look at an example of something that may be like easy to absorb, right? So we have the solution that was provided was for a 79-year-old male. He was a retiring executive, and look at this: a $4 million universal life policy with a $90,000 cash value. What was given to him as an offer was $425,000 universal life. As a result, because the universal life policy do make up about 70% of all the settlement solutions. So this is just kind of like bringing it down and niching down a little bit more. Any thoughts about this one, Mike?
Yeah, this brings up a good point. A lot of agents, especially the younger agents, are saying, who has a $4 million life insurance policy? You'd be shocked. A lot of executives have portfolios that include large amounts of insurance, and sometimes they're not even cognizant of it. They just, put it in a safe or put it on a shelf somewhere. So, if you're dealing with a major corporation, and I'm not talking about it has to be GM, I'm talking about any type of corporation, a regional corporation, as a way of incentive to get executives, they do have large insurance policies, and most executives don't want to continue them when they retire because the reason they had them in the first place is they were educating kids, all of the reasons we buy life insurance in the first place. And if he's getting ready to retire or she's getting ready to retire, they don't have that need anymore. So
And
instead of, in this case, male 79, it was only worth $90,000 if he cashed it in.
yeah,
Instead, by doing a life settlement, he was given an offer of 425,000. Again, that's over 7 times as much money as he could have gotten. Had he not talked to an insurance agent that said, "Hey, by the way, I was talking to this crazy Italian that said something about life insurance, being a life settlement." If somebody hadn't made that connection, that poor guy would have gotten his 90,000 and not know any better that he just gave up, over $350,000.
and and if you think about the movement of money, right? The velocity of money, think about what happened to that instrument. It was pretty much lapsed to the companies because that's what it is. You're turning it in. It's a settlement option. The client would have turned it in for 90,000. But then what happens to investors? Investors wouldn't have the opportunity to circulate this and make it worthwhile. This is why the question was, how much do you know about the value of your life insurance policy? And there's so many different examples. I want to take a look at this term conversion because I think this is another one that if people have a pipeline, they can maybe they could be looking at any policies that are about to expire. But in this case, the client was going to surrender the policy. Remember, if it's a term, there is no cash value. So they were going
Right.
to surrender it for zero amount, right? So if anybody thinks, oh, this is unethical, whatever, think about the result. The client and the family members couldn't afford the higher premiums to convert it. So they were able to settle for $150,000 when otherwise they would have gotten zero. So
Yeah.
the impact that we have in the marketplace is incredible. Go ahead, Mike.
The $600,000 policy I mentioned happened to be a term policy,
Mm-hmm.
and we were within 18 months of conversion. And that was exactly the case. Whether the family could afford it or not, I won't comment on. Point is, they weren't willing to pay the higher premium.
Mm-hmm.
So he was faced with, do I just dump, 20 years of premiums that even though it was term, or do I look for an alternative? Luckily, he had an agent who called me and said, "Is there anything we can do?" And I said, "Yeah, just as a matter of fact, we can, do a life settlement." And that's what we did. Now, he got much less than 150,000 because in his case, he was very, very healthy.
Mm-hmm.
However, the point is, he made a settlement for more than the term premiums he's paid rather than losing everything.
And in all of these cases, one of the three initial criteria, something changed in their health, something changed in their finances, or there was no longer a need for what the policy was intended for. But let's go ahead and take a look at another example using a life settlement to fund an alternative type of investment. Now let's take a look at this one here. A $10 million potential term. And the options that the client had were to keep the term policy and pay significantly higher premiums. Well, that was probably not an option for them. It was going to be an annual renewable term and much higher premiums. The other option they had was to convert it to a permanent and again pay the much higher premiums because of the cost basis and the age relationship. Or look at this one, have the policy appraised for a life settlement. So, Mike, talk about the appraisal part of
Yeah,
of this.
that's very important because
Yeah.
a life settlement is never contractual until you accept the offer. So when a client comes to me or an agent brings a client to me and says, we want to look into this, I tell them it's going to take anywhere from 3 to 7 or 8 weeks. We'll get an offer. Normally, we never accept the first offer. It's like any other negotiations. So we'll get the first offer. I'll tell you about it, and I will give you our representation of how solid the offer is.
Mm.
And I usually do it on a percentage basis. So when the first offer comes back, I say, well, this is a 50% offer. Okay. The second, third, and then probably by the fourth is when we're going to get the most solid offer. And that's when I tell the client that, this is worth considering seriously. Then after they consider it, they talk to their agent, they talk to their family, they say yes, then we enter into a contract. Now, I do want to point one thing out because I don't want to overlook this. It's very important. So let's use this example, $10 million policy. What if the client said to his agent, who then said to me, well, he would like to keep $500,000 of insurance for his family and take 9.5 million and turn it into a life settlement? And the answer is yes. We can not only do that, the 500,000 will be paid up.
Right.
So in this case, if this person decided that this was the only insurance they had, so they wanted to keep 500,000 as a death benefit to their family, they could do that. It would be paid up. So you would have a situation where instead of getting the 550 that was a net offer, let's say it was a paid up $500,000 and 400. Well, you know what? That's a pretty good offer.
Mm-hmm.
Okay, because the family still has the arbitrage on their end by having the $500,000 death benefit paid up, and the client has 400,000 in cash rather than having to pay out premiums that they didn't want to pay, whether they could or not, is immaterial.
And so in this case, the solution, to get the $550,000 net offer, then the policy owner was able to sit down with a financial advisor, insurance agent to reinvest the annuity. Now, I don't like to talk about this because I don't want people to start focusing on, commissions or anything like that, because people feel you, right? Let's talk about impact. Let's focus on that. But let me point this out. So an agent brings a policy like this, offer gets accepted. Well, the agent's going to get paid on that life settlement. But what else do you think is going to happen? Maybe the
Well,
agent, the agent might have the ability to convert that into an annuity product, which then is another opportunity for pay. Or maybe there's a financial advisor that's kind of in the picture and maybe is able to perpetuate an AUM for the future generations. But what else? I mean, and again, I don't want to get too far away from what we're doing here, but I want the agents to think of the potential for other business that could come out of
yeah.
this.
Well, put yourself in the situation. You have a father and mother that are looking retirement. There may or may not be health problems, and money is a little tighter than you would like it to be for them. And someone like Mynor comes along and says, I think you ought to look at a life settlement that might be a solution to some of your problems. So Mynor goes in and he calls somebody like me, and we get involved in it. It takes whatever time it takes, and we settle a life settlement. Mynor has just become the family hero. In one fell swoop, he solved financial problems that family thought were insurmountable. This has got to be one of the best solid lead I've ever seen.
Mm.
Anything that family does in the area of insurance, they're going to call Mynor first,
Mm-hmm.
because they understand that Mynor has the integrity, the ability, and the knowledge to give them the best advice that's available. So to the young agent, you don't want to be out there looking for life settlements when you ought to be selling the policies to the clientele that is your bread and butter. However, keep an eye out. If you see one, bring it to me, bring it to someone who can show how to do a life settlement, and you will have a family that'll be your clients for the next 30 years.
Yeah. And we're able to serve a lot of different people in this category. So we talked about the ideal client, right? Like your avatar for this type of product, 65 and over, changes in finance, changes in health, or it just not doing anything for them. We also talked about the fact that if there's somebody that's younger than 65, but might have a terminal condition or something, more severe, we'll be able to take a look at that. But what if there's a healthy insured? I mean, is this a possibility? So in order to make an offer, this is very, very simple process. We would just need a level premium illustration to age 105 from the current insurance company, and the client's date of birth. That's all we need. But it's usually somebody that's 70, a male 75 and a female 78 or older, and with a policy that must have been enforced for at least 5 years. Now, there is no life expectancy or medical records needed, and the typical ones that we look at are the GUL and the IUL. I'll take the VUL out because we already talked about that. But
Yeah.
250,000 and up to 10 million death benefit. Now, again, this is another area that maybe, because when you think about life settlements, you think, okay, well, somebody's going to possibly pass away soon. But now we're talking about a healthy insured. Like, let's go over this and enlighten them, Mike.
Yeah. Well, in the situation where you have a healthy insured, again, this is all about arbitrage, the difference between what the company pays to have the investment and then what the payment is when the insured finally does pass away. So the longer the life expectancy, the less the investment company wants to pay. So on a $10 million death benefit, for example, they may offer as little as 400,000 or 500,000. Well, I say as little as 400,000 or 500,000 to a guy or gal that's in their mid to late 70s. That's a whole lot of money. That's going to make their life a whole lot better, whether it's for use in their own retirement or if they just want to build a legacy, for their family.
Mm-hmm.
The problem that people forget about life insurance for an older person is the ability to pay for it. And by the time they're in their 70s, it may be causing a burden on their retirement income.
Right.
So getting a $300,000-400,000 settlement might be more advantageous to them. It also depends on what's their situation as far as heirs. If you have an older person who doesn't have heirs, or who feels that the heirs are in a situation where a financial legacy isn't as important, then this makes a lot of sense.
And when we look at the key criteria, we'll go over that a little bit more. But you mentioned something. There's no one else to take care of. Well, there's a lot of people that are their heart is tied to some kind of organization, some nonprofit, maybe a church or something like that. I mean, again, where things were going to lapse and going to go away, at least there's something that they could leave for that portion of it. But let's focus on the insured 65 plus. The older, the higher the potential offer. The premium to death benefit ratio ideally is under 5%. Mike, can you go over that a little bit more? That might be a new concept for everyone. The premium to death benefit ratio.
Yeah, one of the things that people normally don't realize is that the investment companies look at what's the premium they're paying compared to the death benefit. An average life policy is anywhere from 3 to 4%. Some policies could be as high as 5%.
Mm-hmm.
There are policies that exceed that. They're usually not advantageous, and they're usually whole life policies. That's why we don't talk that much about whole life. Because remember, the investor is paying that premium when they buy the life settlement.
Mm-hmm.
So they're doing the ratios. They're doing, what is the potential arbitrage. If you buy a policy and unfortunately the insured dies in the first 6 months,
Mm-hmm.
You may be talking about a 60, 70, or 80% return on your money.
Mm-hmm.
However, if that person lives for 10, 15 years, that's considerably less because all the time the investment company is holding that life settlement, they're paying those premiums.
Makes sense. Yeah, that
Yeah.
makes sense. Well, then, of course, we're going to look at the life expectancy under we call it LE. So if you like terms like that, that's what we say. The LE's got to be under 20 years. And then here's the example that we talked about. We did niche down a little bit more. So the best offers are for UL, GUL, and convertible term with a minimum policy size of 100,000. So that's kind of the sweet spot, kind of the bread and butter. This is this will be the easy one. So, I do a lot of legacy planning, and one of the first things that I learned to do is there are some people that have some blended families and very, very unusual elements going into it. Well, that was not the first client to get familiar with. it was the typical, under 10 million, husband and wife, everything seems to jive very, very lightly. And so I think that for anyone who wants to start looking into this, this is the screenshot they want to take a picture of. They want to, kind of settle on this. Even though this is the key criteria, Mike actually gave you guys a really good clue as to how to be successful in this. And really, the success in life settlements is just asking the question, is your life insurance currently serving your needs, or has the original need for life insurance changed? That opens up a whole conversation.
Yeah.
Now, we offer a free, and this is what Mike was talking about, non-binding appraisal of their policy until it's accepted, right? So that gives the person the ability to feel comfortable that we're looking into this.
Okay.
Now,
Mariner, I want to just quickly go back to the last slide,
mhm,
because that was produced before IUL was in. So when you talk about universal life, we're also including indexed
mhm,
universal life, which a lot of
right.
new agents may think are two separate products, but they're really not.
Yeah, that's right.
Okay.
That's fine. And so we're going to be paying attention to the lapse notices. We're going to look at any term conversions, that are coming in to end. But I want to, you know, when I did some, like, final expense type policies, the reason why they were doing it is because the premiums were going to get too high. And so now, maybe they had, a million or 2 million or 5 million. And what are they qualifying now for? I mean, they're doing maybe 40, 50,000 at best, for that type of policy, because there was a change. But what if we caught that policy before they converted it? I mean, think about the impact that we could have done if any final expense agents knew this information. They would ask better questions of their clients. Now, Mr. Jones, why are you interested in this policy? What's the solution you're looking for? Well, I have this policy over here that I've had for 30 years, and it's about to expire. Well, tell me more about that policy, right? Let's dig into that a little bit more. Go ahead and do whatever you need to do to take care of their business. Maybe they really needed the uh, final expense policy. But while you're doing that, maybe you're taking a look at this a little bit further and saying, look, there's a possibility that we could, maybe submit this for you. So any final thoughts, Mike, on everything? We're about to wrap it up here.
Okay. Just real quickly, and this is an actual case that I'm settling right now, as a matter of fact. An 84-year-old woman who had been my client for about 25, 30 years. We sat down and we told her about life settlements, and we had a $600,000 policy that we sold for $130,000. Now, she wasn't at that time very ill or anything. However, she did have an eye problem, and that was enough of a medical change that for that 600,000, we got 130. We took the 130, turned around, did a new estate plan, and wrote a $1 million policy for her estate. Unfortunately, in November, this past November, she passed away at age 90. And I am now delivering a $1 million death benefit to the family. Now, it's not the most uh, nice thing. I hate losing friends and clients. However, the promise that we made to that family is now come full circle. Now, how was I able to do that? Well, again, new agents aren't going to be aware of this, but for years, we used commissioner tables, CSO tables, that were frozen from roughly 1949 all the way up to the 90s, 1990s. The commissioner's tables are what makes premiums. That's how insurance companies figure out what a premium is. They had gone down so much that we were able to buy the new policy per thousand cheaper than she was paying for the original 600,000. And that's how we were able to arbitrage that for the family. So what's my point? Well, my point is, if you're not sure, call somebody who's been hanging around the industry as long as I have. We'll get some answers for you.
Right.
The other thing I want to point out, and I said it before, I want to say it again, to the newer agents, do not spend a major part of your time looking for this type of contract. You will waste it because once you find it, it's going to take me anywhere from 2 to 3 months to close the deal. And I'm the one that does the work. So you can go about doing your bread and butter business. You can put me into the loop. I will work with both you and the client. I never go directly to the client until the agent tells me that I should. And I'm the one that sits and makes sure that it's being taken care of. Because if you do it, like I said, it's going to be a long time between paychecks.
So what you're saying, Mike, is really you become worth more to that client in whatever capacity you're serving right now.
Well, I go a step further. I make the agent worth more.
Right.
Because I'm always working subject to the agent, even if the agent says, yeah, you can call the client directly. I always tell them, well, your agent Joe asked me to take care of this. I am not interested in trying to, steal a client. What I'm trying to do is solve a problem that the agent brought to me. And all I do is make sure the client understands that if he didn't have a good agent like his agent, he would have never known about someone like me.
Right. And so to wrap it up, it's really about the questions that we ask, and it's having the awareness that this is out there and being intentional, but not taking your focus off of, what you're doing on a daily basis. It's just, some additional knowledge. On behalf of Advanced Insurance Services, I'd like to thank you for joining us today. There's my contact information. And there's the young man right there with his information. We really want to, thank you for the time that you spent. I think it's important for you to then consider, moving over to the next steps and just have the right information so that you could deliver the value and have an impact to your clients. Mike, I'll leave you with the final thoughts.
Well, first of all, I thank everybody for their time. I appreciate the opportunity to let you know what we can do to support you and help you be the professional you want to be. And Mynor, thank you for the opportunity. As always, I appreciate it.
Absolutely. We'll have all the contact information, and also we'll have some links in the description. So we will love to connect with all of you. Thanks again, guys.
Bye now.